Hello, my dear friends. Welcome back to Trading with Morpheus by the book. Super excited. End of week, kind of getting ready for the weekend. I don't know, the weather's crappy where I live at the moment, but hopefully it's awesome with you, and maybe you get a chance to go somewhere and enjoy a bit of fishing or some beautiful weather. But you know what? I think I'm going to be enjoying a bit of reading. Love reading. God, I mean, I even named I named my kid after one of the most kind of like interesting book series that I've read. It was called Codex of Aleria, and actually that's essentially how I named my kid. One of my daughter's name is Aleria. Donald, my dear man, in the house. Love this guy. We have really nice chats on Telegram, which actually you and I can do as well. So if you want to talk about trading, about financial independence, about, living anywhere in the world and making decent money, cars, girls, I don't know, I'm your guy. And there is my dude Henry. Henry as well is, one of my dear friends now. We all chat in Telegram about trading, about things that matter, and somehow, to improve, all of the ways to improve your trading. It can be done one-on-one with me as well. So chats are open, just like Henry and Donald are, in the house as usual. And I do encourage anybody who comes across this stream to maybe drop a comment. Hey, subscribing would be awesome. Well, what we do is we trade on, we kind of go into depth with what's going on with binary options, but essentially, this is something that our channel revolves around fast money, but to make it not just fast but stable as well. And you know what? As I mentioned, I'm not some sort of like a charlatan that sells a trick. I'm here to clarify all of the rules that govern this particular system. And actually, look, yesterday at 1600, right about here, we started our journey about support and resistance, continuation of support and resistance. And you know what? While we were trading, while we were making money together, there was this beautiful, upside down head and shoulders pattern, right? So we understand that when the market does certain movements, there's a higher probability, right? It's not a guarantee, but there is a higher probability that something will happen. In this case, I kind of told you that, well, usually the movement that happens afterwards it's around the size of the biggest um, level between the head and shoulders, basically between the neckline, that's what this is called, and the head itself, right? So when we did this, we put it here after the breakout, and I told you, I was like, you know what, it might not, because when we were looking at 5-minute candles, oh, it snapped us back to today, right? All right, 1 second, where is it? There? No, did I not see it? I skipped through it a little bit. Yeah, where's our lines? Ah, there it is. Okay. So I told you, right, that when there was this head and shoulder pattern revealed, I said that, you know what, the highest point is actually, it's, higher than the previous high point. And I said that, you know what, chances are that after we left it, it's going to go up to this level right here. And sure enough, if we can take a look, right after it broke through, it kind of retraced, it bounced away from a relatively decent support level here, as you can see, and it reached that level exactly like the one we were predicting, right? So understand something. These are rules that kind of govern the system. It would be great if everybody followed these rules. It would make things a lot more predictable. Unfortunately, that's not the case, but that's not really, an issue either, right? We understood throughout this previous week that we had a 1, 2, 3 point contact. We understood that after it broke through, we had like a confirming signal for a multiple, right? From at this point, we had it from parabolic SAR. At this candle right here at the end, somewhere in this candle, the fractal showed us. Somewhere around that point, also we had a shaft that said that, hey, this upward movement from here, from about here where it confirmed the shaft trend cycle, that is going to be an upward movement a little bit. It was over, came to an end. So yeah, there was a bit of a downward movement. CCI kind of came to negative 100 over here. So we see repetitiveness, right, to a particular pattern emerging. The thing is that, once again, I kept saying this throughout the whole week. Last week, and I'm going to say it again, this is like, I don't know, this is like rules for driving, right? Unfortunately, not everybody, guilty as charged as well, not everybody obeys the speed limit. But I promise that I do it in a safe environment, not when any cars are around, and when there are passengers in my car, especially my kids. I'm the ideal driver. But the idea is, once again, that we understand that 1, 2, 3, it's an established level of resistance, actually, or support in this case. You can see that the fractal, anytime fractal, in an upward trend, anytime a fractal shows up on the bottom, there is, once again, a higher likelihood that there's going to be an upward movement somewhere over here, right at this level, right at, I don't know, on this candle right here, shaft said that, and the parabolic switched to the bottom saying that, yeah, there's going to be more green candles than red. And yeah, with the kind of the martingale that we uh, uh, that we trade with, the money management system. Actually, I'm going to go into money management. There's a standard money management and martingale, and then there's kind of like combination of both. This is actually something that we're going to go into with a free course that's going to be posted across all of the channels that we have, so that you guys at your own pace will be able to look at the video, kind of get a general understanding of what it takes. All right, what does it take to drive, all right, to ride this machine, ride this instrument to financial independence? And so money management is actually one of very, very important concepts, one of the important aspects of this. All right, so today, my dear friends, we're going to be talking about, well, continuation, support and resistance. This whole week was about support and resistance, right? Market goes up and down in waves. It's like a pulse. It doesn't have a particular, I don't know, super strict patterns, right? We understand. Let's actually remove, because we can only put 15 instruments at the time. That's why we're always going to have to kind of update what we see. There it is. Right, kind of like this, right? We have a 1. See, it's not ideal, right? It didn't touch. And here, there, we could have said that this is kind of like a false breakout, right? But we understand that while it's above this line, it's, kind of going to go up. But once it switched over, that's it. This is negated. And we draw it a little bit differently. There is 1, but it kind of went down a little bit more aggressive. So we choose a point, and we see, that this was definitely a level of interest, because after that point, there we go, there it is, right? We could actually say that this was a false breakout to an extent, right? Because we, went outside with 1 candle but came back in. But also, we have other maybe levels. Let's see if I can spot them here through my already fogging mask. I'm breathing heavy because I'm so excited to share share this stuff with you, right? So when a resistance level is broken, chances are there's a higher likelihood of a little movement upwards. Right? In this case, right, there was only actually for like 1 candle, maybe 1.5. But then there was another kind of bounce away in the continuation. So right now, I would say that this is like a false breakout. So this line, I would say that's still relevant, prevalent, and maybe we can switch it to a different color. There we go. So while it's below this line, it should continue to go below. But you know what? I think that I'm going to set up another one. There it is. There we go. All right. So we see. So while it's being tested right now, Shaft says that it's going to go up, but as you can see, that's a buy signal, but, we see a continuous downward movement, so it is a bit of a false signal here. CCI is on the bottom, parabolic is on top. Last fractal was to buy, but I think that, yeah, if it's going to break out right now, parabolic is going to switch to the bottom, and what we're going to do is we're going to take advantage of an upward movement for 10 bucks till the end of the candle. There it is. All right. So, if it's going to continue to go up at the moment, yeah, there should be a retracement. I'm probably going to go to my second step martingale. There we go, in the following minute. All right, and it closed, so I'm still going to buy because I believe that it's going to go up higher, but this is going to be the level of interest after. Right, so if it's going to go up, it's not going to be like whoosh, big movement. It should be, maybe up to here. At that point, I should watch my indicators as well to kind of get an idea. If it's going to break out, then we do have a 1, a 2, a 3, and on the fourth point it's going to break out, and actually then we're looking at the previous levels of interest, so probably somewhere here. Right, let's put a horizontal one over here, right about there. So if it reaches up, which I do believe it's going to, and we can actually still bump it up to 60 just in case, because it's sawing this level, right? Well, it's a little high, right? So it looks like we should be in the money. But just in case if it kind of pulls back a little bit, because look, shaft is rounding out, but CCI is pointing up. There is a breakout and parabolic is on the bottom, so it is a bit of oh, I don't even know what the hell happened. Oh, there we go. I won, right? So I don't know, skin of the teeth, but I do believe it's still going to go upwards. So I'm going to open another position. So now, if it tests this period, right, like we've shown this several days now in a row. It has two choices, right? It's got, well, two potentials. It's going to either going to go up, and if it's going to break out, it's going to go up. The next level of interest was actually somewhere, over here, or I would say that even over here, it was kind of, sawing this particular level as a resistance. We can actually kind of say like a 1, a 2, and a third point contact for horizontal. So if it breaks out, it's going to continue to go up. But if it bounces back, chances are it's going to continue to bounce back and go down further. So I'm about to lose this. I'm about to lose this 10 bucks. So, but I'm still going to go up with it. There we go. So this is essentially what this is all about. It's about picking a right entry point based on something factual. So based on something quantifiable, something that you can, essentially, assign a number to, in my opinion. Actually, I should have been making money. I don't know. I think I'm entering a little bit. I think I was entering. I made money here. I lost money on this one because I think I entered a little bit late because it was a green candle. If I entered exactly at the start of this candle, I should have made, it closed higher. That's why it's green. So I should have made money. But it looks like I think I still kind of like lagged a second during that moment when I click on the buy. The signal has to travel across the internet to the servers of Pocket Option, and then come back and essentially update this information to the contract for difference. It's a CFD. It's made. Oh, and you know what? Once again, I was caught blabbering instead of opening at the right moment. But we're still going up, in my opinion. I still think it should go. But it's testing this period, as we said, and yes, there could be a potential to go down as well. So 80, so next one is going to be 180, and 80 is 160, yeah? So 160, but in this case now we're gonna really wait, because I think that if it tested it, in this case it did, and it's bouncing back, well, yeah, I mean, chances are it's going to continue to go back. Shaft is at the, upward trend, so maybe right now really would be a good idea on the following candle. Well, I kind of opened it a little too soon. On the following candle, it would have been better to open this position because in about 6 seconds it's going to close and going to be in the loss on both positions unless it, kind of pushes down a little bit further right now. And, yeah, I don't know, skin of the teeth. No, I did open the right one. There it is for 160. Yeah, so it does. All right, so 50 closed in the loss, and there we go. We got 160. That's about to Well, hopefully it's going to close in the wind, but if that's not going to be the case, you know what? I'm probably going to go back to $10 trades while I'm still with you guys, and when I'm not distracting by my mouth. Like last time, I'm going to do a little bit more aggressive trading, but maybe take my time. You see, this is actually a difficult part about trading live. At a specific time, maybe the market is going to be doing something goofy, and I can actually beat AI, right? I can trade against AI. I can beat it because when you click on this button here, it opens a position for expiration of the highest probability for success. The highest probability for success at that point would be 10%, right? So there we go. I mean, I won, and seems like I won good, right? So with pips to spare, so to speak. But yeah, coming back to this, very, very important to understand that sometimes, the Americans have a really good saying that, don't beat a dead horse. If the market is kind of, you look statistically, historically speaking, in the near, like maybe I don't know, near, hour, 2 hours, if you're looking at 1 minute candles, and you realize that signals somehow are not really matching what, what the market, right? At that point, you have a choice, and this is the beautiful thing about this. Nobody's forcing you to trade right this minute. Go spend time with your girlfriend or your wife. Hug her. Talk about the future. Come back in an hour. Come back in the come back the following day. The fact is that the profit that you can get here is significantly, outpaces anything out of the traditional investing that we have out there, right? On a daily basis. On the daily, this is the kind of interesting, the crypto that you can invest in, right? Yeah, it can give you like 30-40% in like one day, but it isn't going to be every single day. Right, so yeah, you might cash in big, right? You can, go a la bank into a meme coin, the Trump coin, for example. I love Donald. He's, yeah, actually, I love my dude Donald, but that's not Donald Trump here with us. Anyways, but, and yeah, it could, in one day, it could bump, jump out to like some sort of ridiculous progress. But this is not something that you'd be able to count on every single day. And that's why I say that in binaries, you actually get a bigger chance to make some profits over crypto, over real estate, over stock market, over bonds, over futures. So all of these traditional ways of investment, they're not as progressive, but obviously they also don't carry as much risk. That's why when you see a situation where you'd be like, man, I don't know, it's a little, doesn't feel right. Don't force it. Right? I also compare this to, in the previous couple of videos, I compared this to driving, but also compared this to like surfing. All right. If you start paddling at every single wave that comes at you, you'll be exhausted very quickly. And when the right wave is going to come your way, you're not going to have enough strength to actually ride it. Right? So if you're just so if you're forcing the market to obey you, it's like the ocean. It's not going to happen. If you jump in the ocean and splash around, you're not going to create a wave, right? Let's be realistic about this. So same thing here. You get in, you kind of test the waters. You say, hey, you know what? Not really feeling it today. It's okay. Right? Out of a monthly 30 days, if you trade for 25 only, even if you lose 5-6 days of limited loss, you're still going to come out on top. If you aim for like 10%, as I mentioned, in 30 days, there's going to be $17,500 of profit if your balance started with 1K, 1,000. 17,500. But you know what? I'm pretty sure that if you're not going to trade, 5 days and you're not going to make, say, 3-4,000 in that period, so you're looking at 12K. I'm still thinking that's pretty freaking good. Even if you lose coupled, instead of making 10% per day, you're going to lose 6 days in a, whatever spread out throughout that period, and your 1,000 turning into 5,000. I still think that this is like a great progress, all right? Because you take out 1,000, you leave 4. Imagine 4K becomes like 50,000, right? 50K. at the end of the month. Once again, we kind of just run through this formula, right? And I can show, I will show you this at some point later, a table, where, I've got this in Excel, where you change numbers and you get like different statistics, and you'll see. All right, so you don't need to trust me. This is something that, I've been doing for a while, trying to get this across to people. And for a long time, I burn with passion for this instrument, but sometimes people expect too much of it. All right, so let's see. What do we got? We got a sell signal from shaft at this point, but we can see that it's going up. We got conflicting signal from CCI, though. Fractal says up. CCI says up. Parabolic says down. Shaft says down. So who do we believe? You know what? Once again, nobody is forcing our hand to take a side right now. We got conflicting signals. Let's wait until we get something bigger. Now, while we wait, we need to understand that there is a reason why. See, right here we got an opportunity to study, or not to study, maybe to look into different kinds of graph. All right, we got a line graph, and the line graph, you can see it kind of is very jerky because it is immediate reflection of the quotes that are funneled in right now. Pocket Option doesn't have like one quote provider, and every single microsecond it gives you a quote. For ask and bid for euro, dollar, or whatever currency pair or asset, OTC or real, right? It's got multiple quote providers just in case one clonks out. There's immediately like 3 or 4 that are still going to be putting out the flow, and the graph is going to be moving. But you see, you can't really in line graph select the time period. All right, so in candles, you get an opportunity for each candle to show you a cumulative effect of quotes for the past 5 seconds, 10, 15, 30, right, a minute, so on, 10, 15, 30, hour, the 4 hours in a day. Daily candle is the largest one, right? So in the daily candle, you got to understand that this is not really something that Pocket Option clients usually trade, though, look, it's still is governed by certain rules with regards to trend, right? So there's a support and resistance, maybe not that far back, but I would say from here, right? So from, God, what are we looking at here? 23rd, 24th of March, right? Imagine, right? 24th of March, if you open the position on 24th of March, right now, and look over here, right? So we're taking a peek. We see 0502. Holy crap, 0502, and this came out now at the highest point. So if you open the forex position at that point, so it went up just up to here, right? 0502. God, this was like 220 something pips, right? So imagine, multiply that by 10. There's your 2,000, right? And this is in a couple of days. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9. In 9 days, right? One standard lot position, and approximately like $10 per pip in euro dollar. And yeah, we're looking at some massive profit. So let me actually calculate this a bit. 05, let's say 0509, right? So let's say 0510. Let's round it up. 0510. 05. So we got 100, right? So I'm looking at 150, 167 pips, right? In this case, right? So up to here. So at that point, it kind of came back down. But if you open the position here, you open a stop loss somewhere a little bit lower. You see that if it goes beyond this point, or at this point, it closes the position in a minor loss. So it went down low, but then it came up higher when, once again, somebody cashed out. At this point, they were like, ho, I got my, 1,600, just one standard lot. But imagine if you have like 10 standard lots, right? That's pretty cool. So there was a retracement, and there was again a push. Somebody cashed out here, again a push, and the highest point was, essentially 1,053. When you multiply this by, by the value of a pip, it's some serious money. That's why. But this is not something that's traded every minute, right? This is usually in forex. But look, the same kind of pattern is emerging. With terms of support and resistance levels, because somebody is going to be looking to cash out. So we got this as a potential level, and we got this as a potential level as well, which is actually interesting because it's got a pinching factor. right? We've got a very long upward movement meeting now a relatively also not short, right? Since beginning of May, it's been going down and it's establishing new highest lows. All right, so bang and comes out. So it could right now, maybe touch this level and go back down again. If it goes back down, it's got potential to go back down to this already nicely established support level. At that point, if it bounces away, but the movements should be more and more constricted if both of these levels become confirmed levels of interest. This is the cool part. So the reason why I'm mentioning this is that we understand a very broad understanding of where the market is going. So right now, there is also an upward movement as well as a downward, movement potential. And very soon, well, I would say that, I don't know, maybe actually in about 2 weeks, because we're looking at daily candles, in about 2 weeks, we could see a potential squeeze between several levels. All right, so let's actually color them a little bit different so that we can see this a little bit clearer. All right, so there we go. And once again, see, this is not something that, I'm trading with you guys in the real market, or rather in live market. If you click on the link to Pocket Option, the one that's listed in the comments or, essentially in the channel, it's in Telegram channel, it's across everywhere. But if you click on Pocket Option, you choose Euro Dollar, you choose Daily Candle, no matter where you are in the world, in South America, in Europe, in Asia, the graph will be the same, right? I'm not presenting you some sort of pre-recorded thing. This is what's happening right now. This is what you're going to see right this moment. The asset is, there it is, it's reflecting right here, right? That's where it is right now, and you're going to see the pips are exactly the same for, you got to calculate the time difference if you're on like GMT plus 3 zone. Just be aware that the time is going to be a bit different, but the pips are going to be the same. All right, so this is kind of the cool part about this. So right now we have a 2-point contact right here, 1, 2 for a resistance level, and it's going upwards. We have a 1, 2. I would kind of say almost, we could probably, bump it up, kind of like this, right? It's not exact science as I kept saying. So we got 1, 2, kind of like 2.5. I would say 3, 3-point contact. So this is an established. Let's make it even faster. Right, there we go, thicker. This is an established level of support. This is definitely an established level of support. Right now we have a 1, 2 for a downward movement, right? And we have a 1, 2 for, essentially a 1, 2 for an upward potential resistance level. So now here's the beautiful thing. Now, when you zoom in on a, well, let's do like a daily chart. See, we see these levels a little bit more in their, kind of like a shorter time frame intervals. And you can see that's why I keep saying that it's not an exact science. Here you could probably adjust it a little bit, right? So, to say, hey, not from here, but from, kind of like here, right? And once again, if we bounce back to daily chart, right, we will see that, yeah, it overall on the day's perspective, it looks like it's across the wicks. That's why we started it kind of here, because we usually put it across the body of the candle. But once again, the time interval difference matters, right? We actually went from a daily candle, and we're looking at 1 month over here, right? Or actually, no, 301 days, right? It's on the chart right now, which is ridiculous, right? So it's a lot. It's a big period, right? So we're looking at a lot of data, a lot of quotes collected. So we put it across the bodies, but within an hourly intervals, there, the fluctuations are more. So, there's a bit more market noise, what we would call. And this is why I, honestly, thousands of people that I've talked to over the years, I don't really think that I've ever seen a successful long-term trader that trades with 5 seconds. This is just so jerky, right? I mean, they're so, kind of volatile. This information is so raw that the analysis that comes through from the indicators or technical analysis is just filled with so much market noise, the echoes, right? It's not real things, it's not a real impulse, it's just an echo. And this is why, I don't know, it's got a place to be here because, you are able to see the signals a little bit, much sooner, a better entry point than you would look at 1 minute or 10 minutes or, 15 and so on. So the difference between the intervals is that you get more solid data and less market noise the more you increase the time intervals of the Japanese candles. The problem is, though, is that when we're looking at a daily candle, we need to understand that, hey, look there, yeah, there's 1, 2, 3. How freaking long is it going to take for you to get a signal next time it comes up to this level? It could be like 3, 4, 5 week, a week, maybe 2 weeks, because each candle equals, a whole day. So the longer the time intervals, the fewer signals you're going to have. That's why when we're looking at hourly candles, again, right, when we're looking at an hourly candle, yeah, we saw a breakthrough, but, on a daily candle, this is just actually a great support level. There it is. So, for past hour, yeah, we could open the position for an hour right now in the following candle, or even within this one, in 28 minutes and 13 seconds. Let's close it, but, let's change it to an hour. Actually, there we go, 17, right? And we're going to open like a $10 position, right? So, at the end of this candle, it could close, but this is going to be a very long time. And I opened it because on this candle there was a switch to parabolic, and Fractal is saying that, and Sharp is saying that the next, but this happened really on this candle. So the following candle should be also red, or, this one, the one that we took it on, but it's probably going to be a little bit, much smaller than this big candle. Also notice that the size difference of this candle equals approximate move, from like here, right? So, yeah, from this candle. So 1, 2, 3, 4, 5, 6, 7, 8 hours it took to rise, across this range. And then in 1 hour, all it took is 1 hour to bring it back down to here. So if we look, once again, this is kind of interesting, coming back again to the time difference. If we look at a daily chart, all right, we understand that what we're not really anywhere at the moment. We're close to the third, I would say, let's say third point contact, or maybe a little bit higher like this. We're close to this. We got a 1, 2, 3, 3. So where is it going? See, parabolic here shows up on the daily chart. So at the end of the day, we're expecting it that it's going, it's going to be a little bit higher. But on an hourly chart, right there it is. We have parabolic on the top and saying that, yeah, man, it should be going down a little bit more, right? So it might reverse, kind of, somewhere here on the third or fourth, or maybe even touch this candle, or a support level before bouncing away and going back up. So I don't know. I think I'm kind of overcomplicating it a little bit right now, but just understand, in one daily candle, how many hourly candles? There's 24 hourly candles. And so the daily candle, between the opening price and the closing price, there's going to be a green or red candle, but inside that one red candle, there's going to be 24 1-hour candles, or ungodly amount of 1-minute candles that could have a drastic range of movement, hidden higher highs, lower lows. And so when some people, what they will do is they will take a look at 1-minute candle, and open, right, and they say, hey, there's, a bounce back or like a breakthrough or strategy, something happening, and then they'll go to a 15-second candle, and for every one green candle, look, actually, see, we have till the end of an hour, right, in 28 some odd minutes, this position is going to be closed, and we believe that it's going to be going downwards. There's actually a really nice signal about that. between parabolic and everything. But right now, there's parabolic is about to go under, and there should be a bit of a retracement going up. So the time intervals is kind of like going into the future when you look at a bigger candle, a bigger time interval for a candle, and you establish a pattern that it's going upwards. At that point, you can go into a shorter time interval, right? Increase this, right? And understand that it is going to go up, but it's going to go up in waves. So even though, there's a strong signal on a, let's say, 10-minute interval, for every 10-minute candle, there's 10 1-minute expirations, and essentially you are expected to see more green candles than red, right? If you choose to do several expirations at a shorter intervals. So again, maybe we can do it based on an example. All right, so with the regards to, man, this is actually really decent. Let's draw something new. All right, let's take a look. Let's take a look and see. Right, maybe kind of like a false breakout. We have an upward trend, but it broke through. So I would say that after this drop, there's a pullback, there's a drop, there is a pullback. And I do believe that it should, based on parabolic, based on CCI, it's still in the bottom. I think that it should go down further, just like what we saw with a hourly candle, right? That there should be a continuation to go down, and it's got potential to be at a much, much lower level. So we understand that when we decrease the time intervals to like 15 minutes, we might see a different pattern emerging. Oh, it's too steep. Let's see if we can maybe choose a different one. Let's go to, all right, let's go to BHD. Whoa, nice correction. Let's see what we got here. This is with 15-minute candles. Again, if we set up a possible, we kind of have a, possible 3-point contact right here, right? There it is. It's a 1, it's a 2, it's a nice 3. But it also has a 2-point contact. But it also has a nice 2-point contact here. Alright, so if we, usually, and the movement, remember I kind of told you that the movement is the widest part, but we would need to have it confirmed. These would have to be confirmed level of support and resistance. And if it touches this one more time somewhere here and bounces away, then this would be a 3rd-point contact, and then we would be able to expect if there is a breakout, it should go up about to this level and actually make sense because look, here, here with the false breakout potential, it kind of comes to reality that, yeah, this could be it. Now, notice we got 2 green candles here with a 15-minute time interval, but let's drop it down to a little bit lower. All right, there it is. So is there, what is the potential that, what is the probability that we have a 2-point contact here? All right, so we have a squeezing factor. So for a while, if we're talking about from 2 o'clock in the afternoon, about there, it's been going down, establishing the new highest lows. All right, it did go up to this level. All right, so it retraced. About in 56 seconds, this candle is going to, this 5-minute candle is going to close. And right now we got parabolic that says up. We do also have shaft that's rounding out that says that there's going to be a downward movement. All right, so if it breaks through, so we have a 1, a 2, but if on this case it breaks down, then this is an invalid level. All right, so we could actually delete it. And if it breaks down, if it goes down further, we got another level of interest, which would be this support level. That would, once again, 1, 2, 3 with a false breakout, 4. And if it breaks through at that point, the 5th point, then we have a high potential that this is going to be on the bottom side, right, on the low side, and also ride that wave. Once again, this is 5 minutes. So if this 5-minute candle is going to close lower, this one is going to go lower, this one's going to go lower, it's going to touch, and on the following 5-minute candle, it breaks through, and we see confirmation from other indicators that yes, it's got potential to continue to go further, we can go to 1-minute candle and understand you right and ride that trade at the end of every single minute. So we have one expiration with one 5-minute candle that would bring us like 92% on our investment, or we can have 5 1-minute expirations, 1 minute candles, out of which 4 out of 5, for example, will be, well, in our example, red, which means that with proper money management with martingale, we would have significantly bigger return on investment. $10, 92%, $9.20 in 5 minutes. Or we could have 5 1-minute expiration. 4 of them would be in the money, for example. With proper money management, you're looking at like $30, $40 worth of return on investment. So playing around with the time intervals, you might be able to see, if you understand that with 1 hour candles, you will see like serious like a strength to that particular, right? Imagine you look at you look at this asset, and it touched a support level 8 times, and you were like, oh, and it established a new like high for a very long time. You understand that, man, after it breaks through, man, it's going to have a super big movement. So you will understand that there will be a potential like a 2 hour like negative move. So you go from an hourly candle to 15-minute candle, and you can see the entry point a little bit sooner, right? That reversal, right? The strength of trends, or this reversal signals indicators showing you this. And you're like, oh man, that's awesome. So with 15 minutes you confirm this, then you go with 5 minutes, and you understand that there's going to be a downward movement with pullbacks, right? There's going to be a channel, right? There's going to be going down for a while, because with 1 hour candles, there's a whole crapload of information. The range is going to be showing you a lot of 1-minute expirations, predominantly, with the bearish dominance, right? With the negative, because it's been going up for such a long time. There was a reversal, and it should be going. So when you confirm this with a bigger intervals, you'll understand where the market is going. And that's already half the battle. Then you go with the shorter time intervals and be able to understand that there should be a downward movement aggressive, some pullback because people are going to be cashing out, then a bigger downward movement. And on that downward movement, on the resistance level, anytime there is a fractal or parabolic is on the top, you go, baby, you go. And that's essentially what we're witnessing here, right? So what? Let's let's take a look. 1-minute candle, right? We had this on 5, right? Let's see, where is it? On 5, it's not yet there, right? So it is still a minute and 30 seconds until this 5-minute candle ends. But we were also looking at it not with 5 minutes, but with 15. So in another 1 minute and 22 seconds, this candle will close. If it closes below this level, there is in parabolic, for example, switches to the top. Yeah, baby, we understand that with 5-minute candles, we would actually be we would start able to draw a, maybe a resistance level. There it is, like this. And understand that if it, bounces down, if it breaks out, we have a breakout strategy in effect, and that it could go, across the highest part, of this squeeze. It doesn't mean that it will do that, but if it breaks through, we have a potential to see something like this. I don't know, let's see, if we zoom out, because of the, just FYI, I don't know if people will be like, holy crackers, what the hell happened here? Well, remember that in the OTC, it's us, people in pocket option, that buy and sell, that move the asset up or down based on supply and demand principles. But when there is a difference between the real market and the OTC, it becomes so huge I mean, we don't want like this dissonance to be like, dollar, euro dollar be like 156 in the OTC and 104 in the real market. It's too big of a difference. So at some point when there's no positions open in a split second, the system adjusts the OTC price to the real price in the real market. And at that point, we pocket option traders again continue to buy and sell, push this asset up and down wherever we feel that where we feel that it should go. So that's why we see this massive thing right here. It's not something that would ever happen unless like a meteor would strike some part of the world. Their currency could take such a big dive in such a short period of time. So, all right, all right. So yeah, it did break down on the low side. We got parabolic, we got fractal. You know what? This is on 5 minutes, so I'm gonna go with 1 minute candles. I am gonna go with next minute, there we go, with 0, 0, and I'm just gonna ride this wave. I'm gonna ride it downward. Though, actually, see, with 1 minute candles, it did kind of like broke through, but it came back up. So I still think it should go down, and let's see if I'm correct. Next one, and we could also kind of bump it up to 20 just in case if it closes against me, but it looks like it should be in the money. BHD. Wait a second. Why is it showing in euro dollar instead of? Wait a second. Euro dollar, I have a position for $10 until the end of the hour, right? So it kind of bounced out there again, but the BHD CNY OTC, since it's not, there it is. Let's make it here. There we go. It's in the money. Did it close in the money? All right. Wait, I didn't see. Yeah, it closed in the money. So next one is for $10, and I also will open a downward position again, even though it's going up. So I don't know. I think I've opened it at an opportune moment. This is more luck than skill, but I still believe that it's going to be going down. See, fractal is flashing here based on the current quotes. I mean, we see resistance from the bears, right? There's a bit of a tug of war, but there it is. It's going, it's going lower, and I think I'm going to open another right the next minute. It's still going to go down because once again we looked at 5 minute interval, and we see right there we go a relatively good signal that it was 1, 2, 3, 4. We opening for another 10. That it broke through. So chances are that it should be continuing to break through, and continuing to break through up to, well, because of that correction. We can't really see the entire market, but I expect that it should go down a bit further still. With 5 minutes, we got one, we got two, but we don't have a confirmed resistance level with the three. We just have the fact that on the 15-minute candle, the different time period, the 1, 2, 3 point contact is finally broken through with this analysis. So another way we can maybe interpret this, we could actually set up multiple charts at the same time, right? So if you got, I don't know, we can do. Well, all right. Well, I don't know. Am I winning in this one or not? All right. Looks like I lost. All right. No big deal. Anyways, but what you are able to do is if you're maybe favoring um, euro dollar OTC. There it is. On this one, you could where you have all of the indicators. Maybe with 1 minute time interval, right? You click here and you got this is 15-minute candles, but let's turn that right here time frame into 1 minute. All right, but here we would open it for, well, let's say 5 minutes, right? There we go, 5 minute candles. So here you draw, right? We are able to click here. We go into instruments, right there. We got a trend line. There it is. And you set it up. You say that, hey, right there is a 2 point contact, right? We can Move it off to the side right here so it doesn't interfere. And it's got there we go, a couple of point contact. Let's say 2 point contact here. Right, so you understand that at some point we got 1, 2, if it, kind of goes back down, touches it a third time and breaks out. On the fourth one, you got certain signals that come out here, right? Or, I don't know, maybe we could say, could there be the false breakout right here? Right, so we got 1, 2, 3, false breakout 4. On the fifth time it broke through, and you're like, oh man, look, at 1507, right, at 1507. And here we can go actually to that time, 1507, there it is. At this point right here, this happened, right? There was a breakthrough, right, at 1507. And from this point, there it is, right? We could say that, one, here you would have lost, but here you would have won. Second step martingale, lost, one, lost. On the third step martingale, I don't know, this would have been like 50-50 for me, but let's say that you lost third, in the money, lost, and this one, I don't know, lost fourth. This would probably have been on the fifth step martingale, but I usually don't go past the third. Very rare. With you guys, I do it once in a while. I'll go to the fourth step martingale, but something that I usually, kind of got used to is not to go beyond the fourth or beyond the third step martingale. Even the fourth one is always just too risky. All right, so this is exactly what I'm trying to, kind of present you guys with, that when you build a particular point of interest and there are some indicators that show that, hey, yep, there's a good time, good opportunity, higher probability that the next candle will be red, right? Which means that with 5 minute time interval, it means that there will be at 1507 5 candles with a higher probability of being red. All right, and in this case, we have like 3 out of 5, perhaps, right? If this was an '07, so it's a sell, you would have lost. Sell, I don't know, 50-50. Sell, yeah, definitely, higher probability in the money. This one definitely should have been in the money. Bigger, bigger candles, bigger pip difference in the money. So kind of to summarize, today what I wanted to do is to show you that still with support and resistance levels, you're able to establish into which direction the market will go longer term when you look at higher time intervals. That's the important part. Then, after establishing that, hey, for the next 2-3 hours, the trend, the movement should be going down, you can go with a shorter time intervals, right? With the smaller time intervals, like 5 minutes, 1 minute, and confirm maybe an early entry point if you're going for like a long position. If you open an expiration for 5 minutes or 10 or half an hour, right? Or you can go even further, shorter, right? Time intervals like 1 minute candles, and understand that generally it's going to be going down, but naturally there's going to be pullbacks because during that movement, there should be people cashing out, right? So that's what I wanted to present you guys today with. So, anyways, actually, let's see. Do I have a position open? Yeah, I still have that $10 position open because we were looking at it. Let's go back to one chart. Yeah, there we go. Euro dollar OTC. There it is. And let's see. What position was? I think this was an hourly position. Oh man, it's like skin of the teeth. But essentially, there it is. It's in a losing state at the moment, even though it says that this candle should be red. There, we do have an opportunity that it's, going to be a losing position, but I still believe that in the next 5 minutes plus, it should go a little bit further down just because, it's been going up for a, actually, we looked at 1 minute, but I think that we even established this at a daily, right, at a daily interval. There it is, right? So at the end of the day, it's, I don't know, we got 1, 2, possible 3 right here when it touched and kind of came back in, that there might be an upward movement. In the next 2-3 days, maybe on Monday, there will be either a bounce and a breakaway here, establishing this as a level of resistance, right? And we understand that there should be a downward movement, and the next downward movement after the breakout could be somewhere here because this is where it was nicely supported. all right, maybe a little bit lower, kind of understand that it was here, it was here, it was here, that, this particular, let's draw it. I'm going to leave this. I'm going to leave this for Monday discussion. So, imagine, there it is, right? So here it's been bounced off a couple of times. Here it's been bounced down a couple of times. Here it might have been like a false breakout. Here it's been bounced off a couple of times. Here it broke through but closed lower, right? So, we can see that maybe somewhere around here, if this breaks out on this level here, that it's got potential to move down to somewhere here, all right? And able to test this. If it bounces back, right, then we understand that once again, this is going to be the next interest point, right? So if it breaks through, if it goes up, touches it a third time, comes back down, breaks it, we're looking at this level. If it breaks lower, we're looking maybe at different levels about here, because it's also been somewhere, also another kind of key, well, I would say key interest, points, right about here. If it breaks out through this, and once again, we can go into even lower ones, right? At this point, also, we had some interest, right? Here, here, here. So there is constant adjustment. But once again, this is just based on support and resistance, where there might be interest for some people, not necessarily means that there will be. So everything's about probabilities, right? And let's kind of once again go back to an hourly candle, because I think that I've opened this negative position looking at this, because parabolic switched, and because we had this particular level that's been broken through, right? We have one, kind of multiple touch points at this when a stack and a retracement. But once this retracement happened, there was, parabolic switched. If we put up what we've already kind of got used to seeing on the screen, there's a sell signal right here as well for SHAF, and CCI is pointing downwards below the half point, so there should be enough momentum to finish this position in the money. All right, my dear friends, there we go. All right, so I want to wish you a super, super happy weekend. Hopefully your weather is, but you know what? I can't really say that I'm sad that the weather's crappy here right now. I love reading, so I'm gonna read maybe some of my favorite books, maybe play some video games. My PlayStation 5 has been calling me for a while. Anyways, but if you guys want to discuss anything about trading, especially, I'm your guy, right? I burn with passion about this. I know how to explain things. Moreover, I know how to show this and prove to you that market is not chaos. So, like the video, please. Leave a comment. That would be freaking awesome. Give me an opportunity to maybe, to talk to you about, how to bring this to a new level, right? Everybody wants to make money. This is as easy as it comes in terms of, effort. It's all really more about psychological resilience than it is about anything else. All right, so I can show it to you, I can prove it to you. You don't need to trust me, but get into the Telegram channel, give me some thoughts. Let's talk one-on-one. Like, subscribe, and I'll see you guys next week. Actually, wait a second. Let's go through very quickly about next week's schedule. Just in case somebody's looking and you guys might be interested in. And what are we going to be discussing next week? Next week. Wait a second. It's the first of the new month. Yeah, baby. All right. So next week we have Monday and Tuesday is going to be. We're going to talk about stop losses, right? So we're going to see about when you should exit. Be done for the day. What can you ask from this instrument, from binary options? It's very important. When you ask too much, you're, not really setting realistic goals, and then you have to do unrealistic or illogical actions to try to get to these unrealistic goals. But on Wednesday, there's going to be ADP non-farm, which means that on Friday, there's going to be actual non-farm, the most popular macro statistic of the month. right? And there is also going to be the euro refinancing rate on Thursday, mixed with unemployment claims, and there's going to be a press conference. So we're going to do a stream that's going to kind of touch base on some of these aspects because I want to bring your attention to this. Once again, market is not chaos, my dear friends. Give me a chance to prove it to you, and we will, grow your financial independence much quicker. So, once again, I'll see you guys next week. Thank you so much for joining. Morpheus trying to give you the red pill of trading by the book, the truth about this particular instrument. My dear friends, I'll see you all next week. Bye.